Welcome to C2s TV, the Circle to Success TV channel that brings you insightful interviews with business leaders tackling current challenges with advice and top tips from experts in their field. We're delighted today to welcome Liam Brignull from go2 Mortgages. Liam, really nice to have you with us today. And before we go on to chat about what's going on in the mortgage market, do you want to just give us a little bit of background to go2 Mortgages?
Yeah, absolutely. So firstly, thank you for having me on. Obviously, we're quite new to Circle to Success and the network, and it's been fantastic so far. We've loved the few things that we've been out so far. So yeah, thanks for having me on. In terms of us and go2 Mortgages, so we are your traditional mortgage brokerage. So we specialize in residential mortgages. So typically that's helping families, first-time buyers, whoever it might be, looking to buy a residential property. However, we also do look at buy-to-let mortgages as well, and investment portfolios, for example. So people who either looking to buy one property as an investment and looking to rent that out, but we have clients who have got up towards 50 buy-to-let properties now. So we deal with a range of different buy-to-let investors, and we specialize in those two areas. But that for us is really it. So we don't specialize in some of the real quirky areas such as commercial mortgages, for example. That's not really our game. We do the residential side and the buy-to-let really well. So that's sort of the first half of what we do. Quite often, and a lot of other brokerages do this, when you chat to people about mortgages, you also look at the insurance side of things. So quite often when people get a mortgage, they want to look at things like life cover. They want to look at critical illness cover and income protection. They're the sort of three products that we typically advise people on. And we're really passionate about that area of things, probably more so than some other firms. It's something that we've always had a real interest in, and we like to try and encourage our clients to consider these things. So that's another area that we're sort of hugely passionate about. So it's those two things really: residential mortgages with some buy-to-let work, and then the insurances as well. That really makes up what we do, to be honest.
Brilliant, thank you. And in terms of the mortgage market, what is it like out there at the moment?
Yeah, so it's a strange time, as it is not just in the mortgage market, but just in the world generally, I think. We are finding it's really volatile. So what we're finding are lenders are introducing mortgage products at a certain rate. But in the past, a few years ago, those products would have stayed for quite a while, where now what we're seeing is lenders introducing products and then withdrawing them quite quickly. And what we've seen recently is when they've withdrawn them, they're reintroducing them back into the market, but with a slightly higher rate. So rates definitely at the moment are on the increase. There's no doubt about that. As you would have seen, the Bank of England base rate has gone from 0.25 to 0.75 in the last sort of period of time. So that translates itself into the mortgage market as well. So the mortgage rates are steadily increasing. Nothing drastic. If we still look at where we are from a historical perspective, I mean, I'm not in sort of my adult lifetime, but there were interest rates up towards 16 and 17%, which to me just sounds bonkers. I don't know how the world existed, but we're not anywhere near that level as yet, but we have seen a slight increase, but it is still historically very low. It's still a great time to borrow, and there are a lot of people out there who are still looking to borrow and buy property.
And you haven't seen a dip in that I mean, it is only a small rise. And as you said, interest rates have been quite high in the past. So you're not seeing a dip or anything?
No, we're not seeing a dip in activity at all. We're seeing a slight change in behavior from people, in the sense that typically people liked the shorter term fixed rates in recent years, where people now are starting to consider taking a longer term fixed rate, potentially sort of over a 5-year period rather than considering the 2. Right. 2 years is still really needed. There are people who are taking those because of the flexibility that gives you. Obviously, it only ties you in for a 2-year period rather than a longer 5-year period. But because rates look like they're going to continue to increase, as long as you think you're going to be in the property for a 5-year period, people are considering that as an option now, we're finding we're doing more 5-year fixed rates and longer term fixed rates than we were previously. So that's one sort of thing that's changed. But in terms of activity, it's still really busy. A lot of people looking to buy. I think coming out of COVID and lockdowns, as we've seen in the press, people are fed up with their current houses, and
Yes.
people have
And
different
far too long in
desires. Absolutely. So people have different desires. They want outdoor
Yes.
space. We've got a number of clients up in London who are looking to potentially come out because they want that space and a bit more privacy. So yeah, behaviours are changing slightly, but in terms of how busy it is, it's still really busy. If not busier than it ever has been, to be honest.
And is there any difference in the market for first-time buyers as opposed to those already with their own property?
Yeah, so I mean, the first-time buyer area is something I typically sort of specialise in, because being a sort of younger, I guess in my late 20s, being a younger guy, all my contacts are first-time buyers typically. So I do a lot of work in that area. What we're finding, which I touched on previously, is that the first-time buyers typically like a bit more flexibility. So asking a first-time buyer to fix in for a 5-year period can seem quite daunting.
Right.
You can talk about raising interest rates and that sort of thing, and all the mathematics behind that decision. But actually, when you sit them down and talk about that, it's a long time, and it is a long time to fix in for 5 years, especially if it's a couple potentially who are buying their first place together, or it's someone, if it's a single person, it's someone who works in an industry where they think they might get an opportunity to move with work. Typically, the younger the person, the more volatile their lifestyle can be as well. So things can always change. So typically the first-time buyers still, even with rates rising, are liking 2-year fixed rates, because it gives them a period of certainty, but it doesn't fix them in for that long period of 5 years. So yeah, that's probably where we're seeing the first-time buyers at the moment.
That makes sense, doesn't it? You can see that they're 5 years in your 20s is a long time, and not necessarily looking to stay in the same role or in the same place. So that makes sense that they're potentially looking at slightly shorter periods of time, where the older you get with children and longer in a job, then you might stay somewhere a bit longer. So that
Absolutely. And the one thing to mention is just because you're in a fixed rate deal, that doesn't tie you down completely. It's not that you can't do other things, but it just makes it a bit harder. And when you sort of present the pros and cons of the sort of 2-year v 5-year or considering a 3-year deal, when you present those different arguments, quite often the first time buyers tend to fall more towards the flexibility 2-year side. And as you said, a prime example of someone who would be trying to snap up a 5-year deal would be families, someone who's settled down, they've got kids who are settled in a local school, for example. They're the ones that, as long as they see themselves in that property for the longer term, at the moment, they're really keen to tie down a 5-year fixed rate. So they know they've got that certainty for that period of time.
Liam, what about the lending side of things? What are lenders looking for at the moment?
So yeah, lenders are looking for the same sort of things they always have done, to be honest. So nowadays it's all about affordability. So historically, income was the main driver, and it still is. Income is still what matters the most, really. But apart from income, they also look at things like credit arrangements. So if you have personal loans, credit card debt, something that's deemed a credit arrangement, that will have an effect on your borrowing potential. So they're still the two main things. The other thing that also affects your ability to borrow is the loan to value. So what I mean by that is how much deposit you have available, and therefore the percentage of borrowing that you need to purchase that property. So typically, the lower the deposit you have, the higher the interest rate, because there's a slight higher risk to the lender on their capital. So yeah, we're finding that the higher loan to value, there was a point of time in COVID where actually you couldn't get a 90% loan to value deal, but they're now back in the marketplace. You can get 95% deals now, where you only obviously need 5% deposit. So they're back, which is great for first time buyers, especially because typically first time buyers have the lower sort of deposit levels. So yeah, that's what we're finding really, and that's what the lenders are looking for.
And how long is it taking in terms of getting a mortgage through and approved at the moment?
It really depends. I've never seen it so hit and miss at the moment. So, I mean, we had a case. When was it? It was last week, and it took 4 days to get from application to offer, which is incredible. That was one of the fastest I've seen. But then we've had ones that have taken 2 months to get over the line. It really depends on, firstly, the lender that you're using, how busy they are. It also depends on the client situation. So if they've got quite a complicated situation, or if their income stream needs explaining to the lender, and the lender has some questions, quite often there'll be some back and forth with the lender in that respect. And also the valuation. So sometimes, so in the example of the case that took 4 days, the valuation was all done automatically online because it was a relatively low loan to value case.
Right.
When it's a bit higher, most of the time the lenders want to go out and view the property, and obviously that takes time to arrange, and there can always be issues there as well. So it can take a lot longer than 4 days, and usually it does. On average, I would say 3 weeks. I would say would be about average to get a mortgage to offer stage. So yeah, that would be the usual timescales. But in terms of coming out of COVID, it's better than it was in COVID. But I still think things are a bit slower than they were pre the pandemic.
Yeah, so it's still not too long, considering that still quite a few people, I guess, in the mortgage world also working from home and not everybody back in the office. So you know, 3 weeks. 4
No,
days
it's not. It's not. Yeah, 4 days is brilliant. He was a happy chap, but yeah, it's not always not always the case. But it's definitely not. It's not something that we're finding a problem. We're not finding that people are getting frustrated. It is what it is. You get the occasional lender who takes a bit longer than some of the others, but no sort of major issues there at the moment.
Great. And in terms of, we talk a lot about nowadays about partnerships and working with other people. You've got a really good relationship with Move Property Sales and Lettings. How does that work for you? Yeah,
so I've known George since we were at school. So George, I hope he doesn't mind me saying, he was a bit older than me. So yeah, he was 4 years older than me, I think, George. So we knew each other at school, but obviously we weren't great mates because we didn't spend a lot of time with each other. But we both kept an eye on what each other were doing after. And it must have been about 6 to 8 months ago, George got in touch and just said, look, I see you guys are doing really well. We're sort of quite heavy on the social media side of things. So he saw some of that and what we were doing and said, look, let's have a chat. And we've quickly developed a relationship with predominantly the Cheltenham office. And it's been fantastic. It's been really refreshing actually for us to get to know the team at Move in the Cheltenham office and actually get to know some of the agents who sell the properties in there. They do a fantastic job. I mean, I've just hopefully sold my house with them as of yesterday, and that was okay. that took under a week for them to get that all done. So they've done a fantastic job there. But yeah, so the way it works is people go in to chat to Move, and then one of the first questions that Move always ask is about how they can proceed. Do they have the funds to proceed? If they're cash buyers, fantastic. They need to be able to prove that they've got the funds available. But if not, they need to have considered the mortgage. So if there's anyone who's umming and ahhing, they get past our details and we get in touch with them. So it's been fantastic. It just gives us really more people to chat to about what we do, and that's what we're looking to try and do at the moment. Is just spread the word as sort of far and as wide as we can, and speak to as many people as we can about mortgages and about the insurances. But it's been a fantastic relationship so far. I think it's only sort of on the up and going to grow, which is great. But for us, we've always historically worked purely off word of mouth. So this is really, this is the first time we've actually had any sort of estate agency connection. And I think it has to be the right connection. I think there have to be parameters that both parties stick to. But yeah, I've got zero sort of complaints with how it's going at the moment. We're loving working with them, and it gives us something fresh as well. It's a new group of people to work with. So yeah, I'm loving it. It's been brilliant so far.
I think George has sold most of that, or Move has sold most of the houses of C2s people.
Yeah.
staff and also loads of members, and we are always happy to recommend them as well. So it's great to see that those relationships work.
Yeah,
well.
absolutely. And this is me and George hopefully have got a long time in this game still, and we're looking to grow something that that can help the people of Cheltenham and Gloucestershire and have that sort of relationship that people think, actually, yeah, I want to buy a house in Gloucestershire. It becomes not the norm, but it becomes a really attractive option to go to George for the housing side of things and come to us for the financial side of things. And that's the sort of partnership and the sort of thing we're trying to develop long term, I think. So yeah, we are on sort of world domination, they would say.
And you seem well on the way. So that's brilliant. Thank you very much, Liam. It's a really good kind of roundup and overview of what's happening in the market at the moment. So really appreciate that, and hopefully we maybe catch up again and just see how things are going on as the markets open up completely for people, and we go further into 2022 and 2023. So thanks very much, Liam. Really look forward to speaking to you again. Thank you very much.
No problem. Thank you. Thanks for having me.